What a week. I tell you what, I've been digging and digging. Most of you guys have been digging in the snow. I've been digging in market stats. So let's get started and talk about what's happening in the Des Moines and Central Iowa real estate market. Hey there, it's Les Solgrove. This is Simply Des Moines Market Values Weekly Market Update. This is for week 2, 2024. And man, what a week it's been with multiple snowstorms and blizzards and cold weather. It's below zero out. It's a wonder we've done any real estate at all, but starting next week, you'll start to see some of the weekly data. This week's show, we're going to talk a little bit about market appreciation and what's going on in the real estate market. So let's kind of start the show here this week. We're going to start talking a little bit about which homes have appreciated in value and which homes have maybe gone down a little bit. This is kind of a preview to the year-end show. And in the year-end show, I kind of just touch on the price appreciation. And I thought, well, I'm not quite finished with the year-end show yet. So I thought I would bring in at least this portion and go a little bit more in depth. And we'll talk a little bit this week about price appreciation. So just a couple of caveats here to this data. First of all, there's some data that's going to show on some of these reports that is going to look odd, and that's because there's maybe not enough data in the data set from the last 14 years or whatever it is I've got on here from 2007 moving forward. There may not be enough data in those sales figures. There might not be any data in some places. So some of the results will show at 0%. There might even be some outlier sales. Those are sales that fall way outside of the norm. So, for example, it might be a property that, one home in a small community that maybe sold for an extremely higher price point, and that threw the numbers off because these particular numbers, where I typically work with median pricing and median numbers, I'm dealing specifically with averages here in this report just because of the way the report has to be pulled from the historical data. So, but the most important thing is I can't stress this enough. I do not want you to take this data from today's show and automatically just apply it to your market area. So for example, if I show you, I'll have information in here, let's say for the city of Ankeny, and if I show a price appreciation percentage, I don't want you to just automatically say, oh, the prices have gone up by X percent. This is not what this number does for you guys. What this number does is it gives you a benchmark to see overall what's happened. Every single property is unique. You know that. Every single property has its own ups and downs in pricing. So be sure that you're doing your full job. If you're a realtor watching this, or if you're a consumer watching this, understand that these numbers are not specific to your individual property. They're more for the market area overall. So that's my disclaimer here today. So speaking of which, the data that I'm going to pull, that I've pulled and what I'm going to show you tonight, are basically four different categories here. We've got price types, property types, which is effectively, we're going to look at single family homes, condominium townhomes, so condo townhomes and single family homes. We do not use any new construction in this analysis because new construction is a whole different animal. There really isn't a way to determine appreciation. It's more when builders have price changes in cost materials, then prices will go up or maybe come down. But so this report is specifically to existing homes that have been owned before and are not new construction. The time period, as you can see here, we're also looking back. I've got data going back to 2007 for this report. So we're going to look at an overall long period report showing you where this data goes from 2007 to the end of 2023. Also, I can pull this information down to the level of a property style. So a ranch, two-story, for example. The only reason I've kind of kept doing this year is because I've done that pretty consistently in the last couple of years, and I don't want to give up on that ranch and two-story example that I give. Again, don't use this if you've got a ranch in Altoona. Don't use this as your example to your client saying this is the exact appreciation or value up or down of a property. That is not what this is for here. So it is also limited to the metro of Des Moines. And when I say metro, these are the communities that I pull data from for this specific report. So I don't get outside of Des Moines. I don't go to Adel. I don't go to Indianola. I don't go up north of Ames or north of Ankeny, beyond Ankeny itself. So I try to stay within the confines of the general metropolitan Des Moines area here. So with that, here we are. This is our first slide. We're just going to give you some examples tonight. And know that when you go to the show graphics, if you go to you follow my YouTube channel and you find this on social media, there's a link in there that takes you to the show graphics. All of the communities that you just saw will have this particular report on it. It may not have these quick stats at the bottom, but it will definitely have this particular graphic bar chart going all the way back to 2007 through 2023. And just so you know how this works, because it's going to look the same on every single one of them as far as the layout. At the very top, you'll either see single family or condo townhome. So these are stick-built homes versus condominiums or townhomes that are multifamily properties. When I say metro area all, it includes all of those properties within, or all those communities within the metro that I indicated. We're going to look at some specifics. For example, we'll look at Ankeny here in just a minute because they're kind of a leader in one of the categories. But know for a fact that you can go to DesMoinesMarketValues.com and you'll be able to see all of the metro areas graphics for that. Style, same thing. This is where I can draw it down to 2 stories, ranches, 1.5 stories. This is all based out of the multiple listing service, so it's kind of at risk for some data that's not maybe correct, but at least it gives us a good idea. So across the left-hand side here, we've got 2007 through 2023. So I'm looking back for a pretty good chunk of time, and you can see that this green bar going up is a positive appreciation rate, and the red bar going down is a negative appreciation rate. So when the home values maybe fell year over year, and this is looking at year over year. So for example, 2008, prices actually dropped by 1.3% over the 2007 numbers. 2007 was up 1.4% over 2006. And I don't show the 2006 because I don't have the data before that. So as you go across, you can kind of get a good idea of some trending that's going on here. So you can see that overall in the metro area, we really saw pretty steady appreciation rates from about 2015 through 2020. And then, of course, we all know what happened in 2020, and this is the appreciation rates for 2021 during the height of the COVID pandemic. We kind of came back down to reality in 2022 and then back down again in 2023. So what this 4.2% means is that the average sale price of $310,000 was 4.2% up over the previous year. In fact, that 4.2% down here in the quick stats line shows you that that 4.2% represents about almost a $13,000 average price increase over 2022. The number of homes sold in 2023 were down considerably over 2022. You can see that we'd only had 5,776 versus 7,141. Days on market was a little bit longer by about a week. And the list price to sale price percentage, this is the percentage of accepted offers from the original list price. And we'll talk about proper pricing in a future show here, but that's always a popular show too. But you can see that homes were selling within around 97.6% of list price in 2023 versus 98.5. So there's been a little bit more give in the seller side for coming down a little bit overall. Again, this is not any specific example. This is just overall in the Des Moines metro area, and compared to about 1.5% off of list price a year ago. So that's kind of the makeup, the way that this chart looks. We can go ahead and take a look at the condominium townhome area as well. You'll see we saw about a 7.7% increase year over year, which translates into about a $16,000 average price over 2022. Again, considerably less homes sold in the condominium townhome area, about 400 less over the previous year, and days on market again also has been much longer. And so this trend you're going to see here on this left-hand side is you're going to typically see the list price is going to be a little bit lower list price to sale price ratio over last year consistently as we go down the line. Same thing with days on market. Now there will be some changes or some caveats to that if you were to go through the entire stat graphics here. So let's focus in on single family, the metro area of Ankeny. And the reason why I picked Ankeny is because it's, number one, it's the leader in the number of homes sold here in the metro in its own little area as far as pricing goes. 382,466, that was up about 3.1%, or an 11,624 increase. And again, you can see that a year ago, homes were selling almost at list price, just a little over 0.5% less. And this year they're selling at 97.4. They really came down. Didn't have, I wouldn't say came down, but they really had quite a bit less appreciation in 2021 and from 21 and 22 here. You can see that in 2021, they were at almost a 13% increase in price appreciation year over year, only 3.1% this year, which tells us that the market is somewhat leveling out. And we've seen this, even though prices are up, you can still see there's price appreciation going on in our real estate market. And in some cases, you'll see that there are actually price decreases as well here. So that's Ankeny. I picked Norwalk because this is an example of one of the communities where home prices actually dropped by 5.4% overall in the community of Norwalk, where they saw a 10% increase a year ago. Now they're down 5.4% over the same time last year, which means that's about almost a $20,000 swing compared to the previous year. Again, only making up 208 sales yet last year, 163 this year, and the same trending here. But they've had, the Norwalk and in a lot of these communities, you'll see that these areas from about 2013 through 2021, 2022 have been fairly consistent in appreciation of values. And just because we maybe have a year where pricing is, sale prices are down a little bit, this is kind of an anomaly, I would say, in our marketplace, but it's not really that much different overall. And again, when you dig into the actual community of Norwalk, you're going to find that some homes in the single family resale market have actually still appreciated by a percentage. And that's what you as realtors need to be doing to verify. Just use this as a benchmark. So if you're a home buyer out there looking at this data, you can look and say, hey, maybe Norwalk is the place I could have gotten, or I could get a better deal, or could have gotten a better deal in 2023. And maybe that trend will continue. We don't know here. Cumming is a good example of a community that's kind of unique. Now, if you think of Cumming, you think typically of acreages and new construction. That's kind of the bulk of their business. In fact, if you look down here under the number of homes sold of resale properties, homes that have been owned before, there were only 13 homes sold in Cumming that were this past year that were actually resale properties. I would say the bulk of the sales in that community are new construction. And they saw quite a drop in that. Now, just because there's a drop of $93,000, again, does not mean that the home values have gone down by that amount. It doesn't mean they've gone down by 16%. It just means that out of these 13 homes that have sold this last year, that is the number, that's the percentage and the number that's changed. And, every single property, again, is going to be unique here. So, and that's not uncommon for Cumming. You can see that, in fact, I've got this little graphic right here I dropped in. It's going to be a little hard to see, but if you either pause the video or if you download the graphics, you can go to this graphic and you can kind of see the price swings that they've had. Again, out of that 13 homes that sold last year, there were 493, 337, but the years prior to that, they were in the upper fives. So it just means that some of those upper price point homes were just not moving last year. And that's all that really means. It doesn't necessarily mean there's a depreciation of values there. We go over to the condominium townhome side of things here. Let's look at West Des Moines. They're a leader as well. They were actually the leader in the condo townhome arena. They sold 424 homes last year. 337 homes were sold in the condo townhome market this year in West Des Moines. And the average price appreciation in that market was 35.5, with a 16% increase, 16, almost 16 and a half, a little over 16.5% increase. So this was a good example of looking at this market and going, when you look at this compared to all the different metros, you'll realize fairly quick that West Des Moines is really the place where you're going to be able to find the most number of condominium townhomes for sale in any market within our metro. They by far have had the most sales in that particular arena, and they've done a pretty decent job of price appreciation. This is really a pretty healthy price appreciation, that 16.6% here. On the flip side of that, if you go to Bondurant, and you can see right here, I've got one that showed back in 2013, there was 167.6% increase in price appreciation. Well, that's because of an outlier. There were actually, I looked back at the data, there was actually 3 sales of condominium townhomes in the city of Bondurant in 2013, and one of them was in the $500,000 price point. The rest of them were down in that about $180,000 to $200,000 price point. So this is an example of an outlier that you might see on some of the other reports. I've tried to tag most of those that I could find. You'll also see some where I'll put on there that there is a lack of data. So maybe there's only been a few sales. You can see here, actually in 2023, this is a good example. In Bondurant, there were only 2 condominium townhomes actually sold. And so this 13.4% increase of appreciation really means nothing in that particular situation, because there's not really enough data to get a good number. But this is what the numbers calculated out at. So, and you can see that of those 2, they must have both sold right at list price as well. So 13.4% over last year's pricing, and the appreciation is down a little bit, but still prices are up. And that's just a good example of an outlier there. We're going to end the show here. I got 2 more slides before we get to the end slide. This is looking at single family, again, going back to the stick-built single family homes, the entire metropolitan area. And now this time we're just looking at ranch style homes. And if you remember last couple of years, I've done this. I've broken that down into all properties and then ranch and condo, or 2 stories. And so you can see here that pretty consistent with last year. I think last year the number I reported was like 5.8%. And why this is different this year, in fact, they're always going to be somewhat different, is because from the date I pull this data, there's usually a period of 4 to 6 weeks after the end of the month that sales from the previous year, like 2023, for example, come in. And I don't have that data in my initial report. And so I do a catch up. I pull the sales from the end of the year, the previous year, again, before I run it at the end of this current year. And therefore, I do have a little bit of adjustment. So we tend to see some of these numbers, I'll call it cure. They kind of cure a little bit, 6.0% instead of 5.8, I think it was last year. This year, it's coming in at 5.2, so very consistent with ranch-style homes. The average ranch property this past year in the Des Moines Metro actually sold for about $315,700, and that's up $15,700. So right around, well, would have been $300,000 last year's would have been the median sale, or the average sale price for a ranch style home. And ranches are very, very popular. 2,398 homes in the metro of single family were ranch style homes versus 2,975 a year ago. And let's take a look now at the 2-story homes. And this is kind of an interesting number here. You can see that the 2-story homes, while they may still have been popular, 1,565 of them sold, the pricing seemed to have hit its threshold from last year. So it's not too much different from last year. It's only $3,900 higher than last year, which gives us that 1.1% increase over year. So, and again, 16 days on market versus 27 days on market. So, all right. So that's kind of the show. Remember, you'll get all of these graphics. You see all the graphics you just saw tonight. You'll see those on the DesMoinesMarketValues.com website. You will simply go to this site. This is a screen capture of the site. I've updated and cleaned it up. It's much more easy to navigate now. This is the home screen, and I will update this with today's show graphics, so you'll kind of see a new graphic here every week, but it'll have this same format. And then down here you can click on show me the latest videos, which will be tonight's show here shortly as I get it uploaded. Download the show graphics. This is the one where you're going this week you'll see not only the graphics from this week's show, but you'll also see all of the graphics from the condominium townhome market, the single family market, and how they're all broken down by communities. And so that's going to be a deep dive for some of you, I know. So, and let me know what you think about those. The annual state of the market, if you go there right now, it says still in the works, coming soon. 2023's report is coming soon, and that's what I'm working on. So I imagine you're probably mostly going to go right here to this graphics download for the first time as soon as you get out of there. So, all right. Thank you again for joining me. This is been a lot of fun doing this every week, and I will continue to do that through 2024. If you ever have any questions, please don't hesitate to ask me by texting that 202 number there on the screen, or I have a specific website, statguy@DesMoinesMarketValues.com. And with that, we will see you all again next week. Stay warm, or get warm, get dug out, and we'll get back to work next week. Talk to you soon.